the three-step proven process to mortgage and financial freedom. In the next few minutes, I'm going to show you or introduce you to this process here behind me on the whiteboard. And I'm going to talk through this process that we've taught now to over 1,300 people around New Zealand and show them how they can get mortgage and financial freedom without having to have strict budgets to follow, without having to follow a plan to the T, and also at the same time being able to have holidays and live their life and look after their family and do all the important things that you want to do to, to have that life that you want to live. Because we want to have that kind of life too, and we believe you should too. And so this is what our system is about, getting those financial results, but also being able to live life along the way. Proven process. Now, the great thing about the system is that it works for everybody. It works whether you're high income, medium income, or lower income. These are just principles that just work. Okay, so behind me here on the whiteboard, you can see that I've got the future bound version of a pyramid, a bit like your Egyptian pyramids, but the future bound version of it. And you can see that I've divided it up into 3 different sections. Now, the bottom section here, which I'll cover off first, this is about making the most of your income. So you can see that I've written here, your income is your most valuable asset. Now, this is a principle that's at the cornerstone of a lot that we teach at FutureBound, because we truly believe that your income is your most valuable asset. And if it's your most valuable asset, don't you think you should respect it? Don't you think you should be treating it right and doing the right things with it? So that's really what the base level layer of the pyramid is all about, is making a plan for every dollar that you earn, respecting every dollar that you earn. Setting up annual spending plan is what we call it, where we make a projection a whole year in advance around how you're going to spend your money. Okay, and that includes the fun stuff. Right? And we put it in and we plan for it, because people that use the system, they actually have a more fun life and better holidays because it goes into their plan, and you can do the same. All right, so we're going to have an annual spending plan. We're going to make a plan for every dollar that we earn. And on top of that, we're going to set up our bank accounts in a way that reflects and supports that plan. Now, as a result of setting up the bank accounts in a way that supports that plan, this allows you to not have to track every dollar that you spend. This allows you not to be running a spreadsheet in the background and checking how much you've spent on food and groceries and takeaways. You don't even have to use an online app to monitor your spending. You just have to look at your bank accounts, and if your bank account is going into negative, you've spent too much, all right? But you're not going to let that happen, of course. You're going to stay in the positive, all right? So this is what we call bank account accounting, and it's just really very, very simple. Remember, like our grandparents' generation, how they used to have envelopes full of cash for different purposes, different pots of money, different jars of money, different envelopes of money. This was a system that worked for hundreds and thousands of years, and it was a very simple system, but it allowed people to track what money is being used for what purposes. You can just do the exact same thing, but with different bank accounts now. So it's just a very simple way. It's the digital equivalent of the envelopes of cash, and basically it keeps you on track with your annual spending plan. That's really what that whole base layer of the pyramid is about. Now, you'll notice that I've made that the base layer of the pyramid. It's the biggest part of the pyramid. Without it, your pyramid falls down. Okay? Now, the second layer of the pyramid is your mortgage debt reduction plan. The top layer, the pointy bit here at the top, is like your investment plan for your retirement. But if you take away that layer at the bottom, your pyramid falls down. If you don't have respect for your income and you don't have a plan, a spending plan of how you're going to spend your money, it's going to be extremely difficult for you to achieve the second layer, which is paying your mortgage off fast, or the top layer, which is investing for your retirement. So it's just foundational. It's like super, super important. And I often say to people, I show them this picture and I say, when the Egyptians built their pyramid, did they build that top part first, or did they build the bottom part first? And we all know that they built the bottom part first and then they worked their way up, right? It would be like inconceivable to build the pointy top part first and think that you're going to build the pyramid underneath it. Yet that's what a lot of Kiwis try to do with their finances all the time. So once you've got that base part of your pyramid sorted out and you've made a plan for every dollar, well, now you can have a strategic mortgage debt reduction plan, which is this section right here. Okay. Now, when you have a strategic mortgage debt reduction plan that allows you to target principal rather than interest, we know this from experience because I've been doing this for 13 years. And I know that for the majority of Kiwis, when they've got a strategic mortgage debt reduction plan in place, most people are paying off their mortgage in under 10 years. Okay, there's a lot of people that can do it in under 5 years. There's some people that are going to be more than 10 years. Okay, it's still going to be a whole lot faster than what you're doing right now. Okay, but have a think about how much more money goes into your pocket if you don't have a mortgage to pay. So remember, this feeds into our number one principle that we teach at FutureBound, which is your income is your most valuable asset. Okay, so that means we want to respect our income, but that means we also want to get our income back. So have a think about what percentage of your income is going to the bank right now. Are you giving away 30% of your income to the bank, 40%, 50%, 60%, maybe even more of your income to the bank? Now, let's say you're giving away 50% of your income to the bank in mortgage repayments, and let's say you've got a 30-year mortgage. Are you happy with that? Are you happy with the bank taking 50% of your income for a whole 30 years? Okay, I wouldn't be. You shouldn't be. It's nonsense. Okay, so this is why it's important to have your second layer here, which is having a strategic mortgage debt reduction plan that allows you to target principal so that you can get rid of that mortgage in under 10 years. Because when you get rid of your mortgage under 10 years, you know what you've got in your pocket? You got cash, all right? You got cash in your pocket, and that's what you want. Your income's your most valuable asset. Let's get the cash out of the bank's pocket. Let's put it into your pocket. Now, you've built from the bottom up, right? You've spent some time doing this. You've spent some time doing this. And at a certain stage, you are now ready to invest for your retirement. So this could be investing in property. You could be investing in managed funds. This is the part that you get to choose for yourself, how you invest for your retirement. But if you've done a plan around how much money you're going to need to totally fund your retirement, you'll know that for a lot of people, this is a decent amount of cash. Okay. And if you don't have this and you don't have this, it's really, really hard to get that. And so this is why I encourage people to go through a process. Don't think you can just jump straight to the top of the pyramid first, which is what an awful lot of people try and do, and it causes a lot of problems. I encourage you to build from the bottom up, build with wisdom, get your system set up properly, and then it kind of just flows quite easily from that point on. Now, I'll give you some examples. I know of lots of people that have jumped that section, and they've gone and bought multiple investment properties back when the interest rates were 2.99% or similar. And what happened when the interest rates went to 7%? They had to sell those properties off because they just couldn't afford to keep them. It was just kind of really short-term thinking around their investing. And then when the interest rates went up, all of a sudden, they can't even hold on to those properties anyway. They had to sell them off, which defeats the purpose of even buying them in the first place, right? Because for this top part to work, you need to hold on to your investments long term. You're not going to make truckloads of cash holding onto them for a year or two or three. Like, this is a 10, 15, 20-year investment to get your full return. So this is why we really encourage people to just understand the whole picture, work here, and then you're almost guaranteed results. Like, it pretty much works for everybody, right? And this is really what we have worked out. All our systems and processes that we've worked for the clients that work with us, we've shown them how you can put this into place and really increase your chances of success, because you've got these fantastic systems and processes and principles to follow that allow you to not only take control of your money and pay your mortgage off super quick, but it also allows you to just have a lot more freedom in your life. One of the things that a lot of people say to me that use the system that we teach is that people at my work come up to me and say, how come you can afford to have so many awesome holidays? And do you know how they can afford to have those awesome holidays? Because they put it into that plan right down there, down the bottom, okay? And they still get to do that. They still get to pay their mortgage off faster. They still get to have holidays along the way. And it's because it's planned in advance. Now, here's a quick question for you. If I was to ask you right now, can you tell me in detail exactly how you've spent your money over the last 12 weeks? Can you tell me down to the dollar how your money has been spent? Can you do that? Almost nobody can, all right? But do you know what? You actually should be able to, because you should have made a plan for your money, which tells you how you're going to spend that money. But if you can look at yourself in the mirror and honestly say, do you know what? If I look back at the last 12 weeks, I don't really know where my money's gone, then that should tell you one really important thing. And that is, you need to start here. Start here, work your way up. So that's all for this video. I hope that you found this really informative and interesting, and you've learned something new here today. And hopefully it's just started opening your mind to what is possible. And I want to encourage you on that, because that's what we're here, is to help people like achieve these results and these goals that maybe you thought are actually just not possible, but for a lot of Kiwis, they really are. Now, if you want to find out more about this, you want to find out more about Future Bound and what we do and learn more about what I've just been talking about today, then I want to invite you to come along to the roadshow that we're having in May. So we're going to be doing 2 live road shows in May. So one's going to be in Wellington in mid-May, and the other one's going to be in Auckland a couple of days later in mid-May. And you can come along, meet us in person, and come and listen to those sessions. They'll be about a couple of hours long, and we'll have a few drinks and something to eat together as well. And so that's going to be May, and then a week after those live sessions, we're also going to be doing a live online broadcast as well. So look out for that if you aren't able to make the in-person sessions. The Wellington session, by the way, is going to be held at the Bulcott Heritage Golf Course in Lower Hutt. The Auckland session will be held at the Remuera Golf Course, and then the live session, of course, will be online a week later. So look forward to either meeting you in person or maybe seeing you at the live session. We'll see you then.